Hello again. It is Thursday, August 12th, and I am very late, and our company is late getting our typical Athens and Oconee update out, but I wanted to get it to you. It's a busy time of year. We have a lot of properties where people move in and out of, especially rentals. So it kind of makes August an interesting time, especially for anybody involved in, management property or student rentals or any type of investment property, really, a lot of turnover. But back to it, let's focus on residential stuff. Let's focus on what's happening here in our market, primarily focusing on Athens and Oconee, as we always do. And the numbers are really the most interesting thing to me because they really tell the story. I'm going to try to make this not too long, but what I really want to focus on is 2019 versus this year. And because we're all going to consider 2020 really just throw it away. You can't call that anything normal. I've got the numbers there, but what I really think is the most important to look at is what happened before COVID and what's happening now. So if we look year to date of the total new listings in Clark and Oconee, and basically the new listings in 2019 were 1,738, and right now in 2021, 1,747. So listings to market, there's only a 0.5% difference change. Under contracts, there's only a 0.5% difference or less. Basically, see 1,068 in 2019 to 1,062. Where we really see the big differences are sold price and the total amount of homes sold. 281 year to date was the average sold price from 2019 to this point, and it's $340,000 today. That's an 18% jump, and that's where we're seeing these big differences. Some things are very normal except for price and the volume of the transactions being done. Total homes sold almost 1,450 to 1,267, which means we're about 12.5% less than 2019. And what you're seeing is we've got a higher demand, but the supply has been lower and the interest rates are low. And that's what's driving up this price. The metrics are remaining the same and we're not seeing a big difference. So let's just look at July over the last 3 years. And as you can see in 2019, it was 220 to 247 new listings. So we actually put more listings on the market in July than we did in 2019, almost the same as 2020. And then the under contracts, we put a lot more under contract in 2021 than we did in 2019. We usually slow down, right? Usually you get to the end of July, August, and we are experiencing some slowdown in our market. And you're seeing some of these prices where people have been asking too much starting to come down a little bit. So we hope that's a sign of normalizing. And then let's look at this average sold price over the month of July. Same story, about 18%. And total homes sold, a little bit higher in July, which I would say what we did see in the first week of August, I saw a lot in our company personally. A lot of sales took place just after July that, if you probably backed them down into the month they could have got into, we would have been closer to on par with 2020 instead of lagging a little bit behind, and we would have been even further ahead of 2019. So what we're seeing is more demand, not enough inventory to meet it. It's same thing's going on. Let's take a look at these numbers on the graphs because they help a little bit more. I got a little more fancy. I made it look a little better. And let's take it Athens, Clark, and Oconee County over the last 3 years. These are listings to market. 2021, as you can see, this is when it was crazy when we just had so little inventory in February. We got up to more normal amount in April, dropped back down in May, spiked back up in June, and here we go. Notice that all three of these years, the listings are going to trend down in July and usually through the fall. Now, when we look back at 2019, that was a more stable year, but we're still well above on listings than we were in 2019 for this part of the year. See this gap? That's pretty big between what's happening now with listings coming to market. It's a good sign for you home buyers that maybe there is some cooling off out there. And then, of course, let's just take a look at the residential sales. We've seen a little bit more steady of a line in this red line now that is still above 2019. And then, of course, here's this outlier we call 2020, where we just spiked up after the first lockdowns and then came back down to earth a little bit. But the main thing I want you to walk away with is this market's been so crazy that a lot of people talk about the housing bubble, these appreciation. We're talking 8% appreciation in Clark and Oconee County in 2 years, 18%. Well, here's some things that we got from our group we follow over at Keeping Current Matters. Let's just look at this housing market compared to 2006 real quick. And this is a figure about mortgage originations with a credit score below 620. Most of you know that 620 is kind of a bar. If you're in the 700s, you generally have good credit. If you're below 700, you might have fair to poor credit, depending. And in 2006, there were 376 billion mortgages with below 620. And then in 2020, there were only 74 billion. That is a difference of $300 billion worth of mortgages that were given out before. So we are having good mortgages go out to people. They're not being given to folks that should not be applying for these interest only mortgages or adjustable rates back in 2008. And then here's a stat that we kind of look at the housing bubble and what was going on with income to debt ratios in 2007. And a lot of people worry that people are buying these nice houses and their cost of living is going to go way up. Well, actually, our cost of living right now and the debt service ratio for mortgages as a percentage of disposable income is the lowest it's been since pre 1980. We're at 3.45%, and it was at 7.2% in 2006. So we're almost a full half lower right there. The point being is, despite that this market has been crazy and has some of you not knowing what to do, you should not be fearing a housing bubble. What will slow this down is the eventual rise of interest rates because they played a part, but we just have such a low supply. Our demand is temporarily cooling off. And then once we get towards the end of the year, and of course into new year, people will start to enter the market again. Hopefully, we kind of see appreciation slow down on a more modest tick than it's been. But overall, our market's strong. Reach out to us if you've got any questions. As usual, hope you're doing well. Kept it under 7 minutes. Y'all have a great rest of your summer here. Kids are back in school, and it is hot as blue blazes in Athens, Georgia. Have a great one.